Welcome to the Live Wealthy Podcast with Dawn, where we are growing our wealth and our worth at the same time. You ready? Let's go. Welcome to the Live Wealthy Podcast. My name is Dawn Dahlby, and I'm a certified financial planner, the country's first behavioral financial advisor, and the CEO of a wealth management firm called WELLthy Financial Group. And I am here to teach you how to live well with your money. And it is December, you guys, one of the most, to me, the best time of the year where we get to live in abundance. We get to celebrate the holidays and celebrate love and all of the abundant things that happened over the year. And I love this time of year. So as I record this podcast and we close out year 2024, I want to spend just a little time on reflection and ask you a question. Do you believe that you have worked hard this year? And I'm guessing 100% of you are going to say yes. Life is hard. It's hard to make money. It's hard to live life. And we all put in a lot of energy to do that. But so yes, the answer is yes, you have worked hard this year. But then my real question to you is this: is your money working equally as hard for you as you have done for it this year? And most of you probably are going to say no, or I don't know. And money is one of the most important tools in our life. We cannot deny that. It's like oxygen. I say that all the time. But and I also say, look at your core values. And though I don't believe money is a core value, but I do believe the tool that money is provides us to live out our core values. For me, the most important things in my life in this order are my spiritual connection with our Creator, then my spouse, then my family and friends, and then not necessarily money, but what money provides for me to be able to live out my other core values, which is excitement and achievement. So money is so important. And to manage money well takes a significant amount of time. It's complex. Money is very complex. If you want to learn how to maximize every dollar so you can enjoy the most abundant things that are available to us on this earth. My question is to you: are you taking the appropriate time to manage your money and get the most out of your money, or are you hiring that out? Because I'm here to tell you the cost of inaction is so significant. In fact, it costs you more to do nothing than it does for you to hire out and have professional help. Do you hear me on that? It costs you more money in doing nothing and inaction around your money than it does to hire out a trusted fiduciary team of experts to help you out with your money. Because the team of experts are looking at your tax strategies, are looking at your investment strategies, and trying to show you how to arrive at enough and reduce that financial stress. And it's getting to the time of holidays, right? We are celebrating December and the holidays. And for you to be able to not have stress over this holiday time, you need to make sure that you have enough money to support everything you want to do in December. There's so much that we want to do. We want to have parties. We want to host parties. We want to go to parties. We want to buy gifts. We want experiences. We want to eat together. We want to laugh together. We want to, be involved in fun games and all of the things. And that's why I love December so much, is because it's this abundant time of year. There's nothing scarce about December. However, for most of us, if we're not fully taking the time to utilize all of the investment and tax strategies, we're going to feel that pressure or that financial stress over Christmas time and the holiday time where we start to feel guilty. We feel guilty spending money because we feel pressured into spending money and to experience everything. And so how I am able to feel guilt-free over the holidays is because I have these strategies in place in my life that actually, these financial strategies actually way more than pay for my extra holiday expense. What am I talking about? Dawn, what am I talking about? These tax and investment strategies. Well, I'm here to tell you that for the majority of my clients, I'm able to find tens of thousands of dollars in overpayment to the IRS. Most of my clients, before they start working with us, are overpaying their tax dollars. I, in fact, have even a handful of clients that were overpaying their taxes by hundreds, and let me repeat, hundreds of thousands of dollars. And by legally giving them the IRS and government tax strategies, they were able to save hundreds of thousands of dollars. Now, whether you're able to save $1,000, $10,000, or $100,000, the point is you are probably overpaying your taxes. And guess what? There are so many things that you can do yet by the end of 2024 to help you reduce your tax bill so you can enjoy the holidays guilt-free, just like I do. I want to review my top 10 strategies, tax strategies that you need to employ in your life before December 31st closes out the day in year 2024. Now, the question is, are you going to take the time to do these 10 things or are you going to hire it out? Okay. That's up to you. But I just want to quickly review these top 10 things that are available to most of us to save taxes so we can have money to live an abundant life in December. And most importantly is live an abundant life every single month of the year. What are these top 10 tax strategies that I have that you need to get done by December 31st? Number one, tax loss harvesting. If you have a non-IRA, non-qualified account, and you have gains in your portfolio, which you probably do because we've had a beautiful year in the stock market this year, how do you offset some of that gain? Well, how you offset some of that gain is either sell maybe a investment, one of your investments that wasn't so lucrative in your portfolio, so you don't have to pay that capital gain. So you can still experience all that capital gain, but not pay taxes on the capital gain. And a little secret is that if you have a mutual fund, most mutual funds in November or most of them in December actually tell the investor what their capital gain is, and they distribute those capital gains in your investment. Typically in December, that means that if you sell that investment before they distribute that capital gain, you don't have to pay it. But you got to experience the capital gain all year long. Okay. So tax loss harvesting, number one. Number two is your charitable contributions. We need to get our charitable contributions in by December 31st. The one way to do it is a cash donation. That's the least smart way to do that. The better way is to give appreciated stock or do a donor advised fund. But those charitable contributions need to get in by the end of the year. Number three, QCD, qualified charitable deductions. These come out of your IRA. If you are 70 and a half, you can take IRA money and have that IRA money say, I want X amount of my IRA money to go to a charity. That money cannot land in your checking account, but can go directly to a charity. And then that's what we call a top line deduction. And anytime you can get a top line adjusted gross income tax deduction, it could potentially set you up for even more deductions like lower Social Security taxation, lower Medicare premiums, et cetera, et cetera. The name of the game is to get top line tax deductions that lower your AGI. So if you're 70 and a half, consider a QCD, qualified charitable deduction or distribution, I should say. Number 4, maximize your retirement plan through your employer. Now, some of you listening to this act as the employer and the employee. You need to get in the employee, your personal contributions in by December 31st. The employer contributions usually can be put into that investment account by the time you file your taxes, which is typically April. Okay, but maximize those retirement contributions from an employee perspective. Number 5, RMDs, required minimum distributions. If you're 73, some of you are 73, you need to take those required distributions because the IRS wants their tax dollars, and you need to take that required distribution out of your IRA before December 31st. And if you don't, you're penalized 10 to up to 25%. It used to be 50%, but you're still penalized on that money. That needs to be done by December 31st as well. Okay, number 6 is a flex savings account. Some of you have a flex savings account, which is an offered benefit through your employer. And the flex savings account typically are a use it or lose it account. If you have money in the flex savings account, you need to use it by the end of the year. Sometimes employers let you roll over that money, but you typically have to tell them that you want to roll over that money. So use your FSA money by the end of the year. Now, number 7, you might have a health savings account. If you do, my favorite account in the entire planet, because it gives you 3 tax benefits. You get a tax benefit on the front end, which are your contributions in. It grows tax deferred or tax free, and it comes out tax free if used for medical. If you have a high deductible plan, HSA, you need to get those contributions in. Now, a little secret on this too is that technically you have until you file your taxes. Not an extension, but where you file your taxes by April of the next year to get those HSA contributions in. But man, it's my favorite account. If you have a high deductible plan, max that out. Number 8, bunching deductions. We typically, all of us, we have deductions, okay? We have tax write-offs, tax deductions, and we can either take the standard deduction or we can take an itemized deduction. And the standard deduction is pretty high now. It's around $14,000 if you're single. And what happens is a lot of times people are like, I'm just close to that threshold where I can't itemize my deductions. But what you can do is bunch your deductions. What does that mean? Well, you can alternate year by year, where one year, maybe this year, you want to bunch your future deductions into this year and take and itemize your deductions so you can get your deductions over that 14 plus threshold, $14,000. It's actually $14,600 if you're single to get over that threshold. And then, so you bunch all of your future tomorrow 2025 deductions in this year. So what are some deductions that you can bunch in this year to get your deductions higher, claim more write-offs, and reduce your tax bill? Well, guess what? I just happen to have the list right here. Here are some of them. Medical and dental expenses that you could prepay some of those and have those land in this year so you can itemize. Charitable contributions. That's another one. Another one is your state and local taxes. Maybe you want to prepay your property taxes or your estimated state income taxes. We're allowed to maximize that deduction. And I've had clients prepay their property taxes in this year so they can itemize and they get more of a tax deduction. And then next year they don't pay it, but they still get that standard deduction. How cool is that, right? Okay. Mortgage interest. You might want to make an extra mortgage payment or two if it's allowed for you to claim more mortgage write-off in this year. Now, remember, the mortgage cap of deductible interest is $750,000. So if you have more than that, that won't apply. What about investment related expenses? So if you are paying for fiduciary advice, like all my clients do, they pay us a fee for service. Then what you can do is, as a business owner, you can obviously, because we're giving business financial advice out, that is a tax write-off for clients. But sometimes they want to prepay their tomorrow's or 2025 fees in 2024 to maximize that write-off. Okay. If you're not a business owner, but if you're paying advisor fees, you can pay them out of an IRA, which means that's money that you haven't been taxed on yet. So you're essentially also getting tax discounts and tax deductions on your advisor fees. That's why I'm saying it costs you more to do nothing than to pay for an advisor who can take and make sure these strategies are implemented in your portfolio so you can actually get more out of the value and the rate of return and the tax strategies than what you're paying for. A couple of other ones. If, job related expenses for self-employed individuals, prepaying any legal deductible business expenses. So if you have any expenses that typically happen in January that you want to prepay this year to get more of a write-off this year, you want to do that. And let me just say this again, so you understand this. As business owners, our income can fluctuate. Some years we have great income. Some years we don't have such great income. And so if you are projecting this year to have really good income, that means that the higher the income that you have, the higher the tax bracket you could be in. And that's why we want to make sure you're maximizing your deductions in a higher tax bracket environment. Does that make sense? If you have higher income this year, you're potentially in a higher tax bracket. So that's why we want more deductions in this year, or in a year where your income is higher than when an income where your income is lower. All right. And finally, if you have kids in college, I have two, super expensive. It may be possible for you to prepay some of that tuition and get a tax write-off this year where you can itemize a ton of your deductions and get a lot of deductions in this calendar year. And then next year, you still get to at least have 14,000 or whatever the number grows to for 2025. You still are able to take that standard deduction in year 2025. You guys, these are significant tax savings. Okay. So that was number 8, bunch your deductions together. Number 9, 529 plans is the educational plan for all of these, for you prepping or saving for college education for your kids. Now, you can always save into a 529 plan, but guess what? Let's say someone wants to gift money into that 529 plan for your kids. Maybe your parents. So grandma and grandpa want to gift money in. Well, they can gift $18,000 a year that's excluded from gift tax. Yes, there's gift tax on top of federal, state, income, property, all of the things, right? But there's also gift tax. And every year there's an exclusion to that gift tax. So one grandparent can gift $18,000 in, 2 grandparents can gift $36,000 in, and have that go against and not count towards their lifetime gift. So it's an annual per person, $18,000. And by the way, you can also do a one-time lump sum of 5 annual gifts into a 529 plan. How cool is that? Right? So lots of money can go into 529 plans, but if it's a gift, those contributions need to be in by the end of the year. And then finally, real estate. If you have real estate offers so many additional tax benefits. Some that I already brought up to you in bunching the deductions or prepaying property taxes or interest or what have you. If you have real estate, that's a whole nother bucket of tax write-offs. But again, many of those need to be solidified, and having the strategy and the implementation of that strategy in place by the end of the year. So my question to you, I know I just reviewed a ton, like 10 different tax strategies that really the majority of them need to be done within just, a few weeks by the end of the year. So are you really going to do this? My guess is no, because guess what? If you don't have time in January through November to get this stuff done, there's no way in December you're going to make time to do that. So hire out this work. Obviously, our team is here to help. We have a full fiduciary, highest credential team out there that can help. And I just want to state again, it's not here just to grow. I'm not here just to grow my business, but I'm here to give you advice to help you grow your life way more than me growing my business. Okay. That's my passion in life, is to show you how to arrive at enough financially, emotionally, and being able to live this abundant life, not just in December, but live an abundant life through the entire year. So here's my holiday gift to you, is that if you click on the financial assessment below and you fill that out, what I'm going to do, and if you fill that out before the end of the year, I'm going to offer you one of two paths. And it depends upon, these paths depend upon where you are at in your financial journey and what you need. Path number one is that I will offer you a complimentary consultation where you can ask me all of your questions, and I'm going to give you the true fiduciary trusted advice based on your situation and what you need help on. Some of you might not need that full one-on-one consultation, or you might not even want that. However, if you qualify and you want access, I'm going to give you private access to our texting, our private client texting, where you can text me personally your financial questions, and I will give you the advice that I feel is best for your particular situation. That's the holiday gift I want to give to you today, because at the end of the day, money matters. Money is so important. It matters in our life because it gives us the opportunity to live full. And when we fully live our lives, we're able to fully give to others. And that is our birthright as a human being. So don't forget to fill out that financial assessment. My team will get in contact with you, and let's together learn how to live wealthy.